Welcome everyone to the Kendall Report. And I just want to correct Bo, I actually do have a crystal ball. So there. I haven't brought the crystal ball out for a while, but thanks for mentioning it. Anyway, welcome everyone. Make sure you hit that like button, subscribe, all that good stuff. Trying to beat the YouTube shadow banning that's going on the channel, I'm pretty sure. So anyway, interesting day today. We saw some follow through some pretty decent run up intraday. There was a couple things. I put a couple tweets out today, and one of them was we traded right into R2, which is what I was talking about yesterday. I believe the actual high on R2 was 82 and change. We printed 81.50, so we came right into that. We got rejected. Algos on the hourly actually were suggesting we'd come back in. Thought we'd hold R1, but we continued to decline, and basically to the point where we were barely up on the session. So what looked pretty good, faded into the session. But as far as the 3-day trade goes, by the way, we did get a new high, and we did get a higher high, but a higher close. We didn't need to have that, and I'll go into detail in a little bit on what is necessary for today. Today will be today meaning overnight, and Tuesday will be a critical day in this pattern, and whether or not it's going to follow through or we're going to go back into the choppy range. And as I've talked about over the past couple months, we've really been, after the February rally here, we've really been locked in a range, 39.50, 40.50. We traded up to the 80 handle today. Lots of resistance up here and crazy support underneath the market. So we're just locked in the range. Algos are suggesting that's probably be more of the same as we go forward here. So some more details. Let's talk a little bit before I get into any real commentary tonight. What happened yesterday? Yesterday's economic numbers, there were just one. Factory orders came in at 1.6. It was expected to be minus 1.8 to 2, so it came in minus 1.6. A little better, I guess you could argue, but nothing good. And as we come into today, that was the only release, actually, by the way. And as we come in today, we have consumer credit expected to be 17.8 billion. And I know a lot of people are talking about the increase, and we're really not. I don't think it's a real big issue here on as far as the economy goes. That people are. I suggested last night that it's actually more of a positive than a negative, that people are spending money. They at least feel like they can pay their bills back. And I think that's probably one of the things when I talk about Powell's conference that's going to start today, or his testimony in front of Congress. I'll mention a couple of things about that here in just a few minutes. But for the most part, that's all that's coming out tomorrow. And so let's go ahead and talk a little bit about what I think Powell's going to do. We have 2 days of Powell to put up with. I'll show you what the algos are looking like on a daily. Looks like maybe we could get a minor pullback, but we're likely to hold support levels. Like I said, I'll go through all the technicals here in just a few minutes. But let's talk about Mr. Powell. He's going to continue the dialogue that they're going to keep rates higher. I've told you that for months on end. They're going to keep that up. They're not going to change. There's no pivot coming. But one of the things that I expect from him is to really talk about the employment, the strength in the employment. And I made a comment to myself here, is that he'd like to see a lot more of us unemployed than there is. The Fed seems to think that they break the inflation through unemployment. I'm not sure that's the case from a standpoint. I think what we're going to see here is him just jawboning this thing, and I don't think he's going to say anything super bearish where the market collapses or anything like that. There was some interesting action also yesterday with the Russell was down 1.5% yesterday, and I did see some comments on that. A few of you put out there on Twitter was asking, does this concern me? And it really doesn't. It's interesting because I think all of this and this little narrative pops out and it plays out in different places. And the narrative is that the high rates and there's a recession coming, all of a sudden that pops out and that's going to affect the small cap stocks. I'm still on board with saying that what I'm seeing from our database is a continuing rotation toward those mid and small cap stocks. And I don't see that being a problem. You just look at the year-to-date performance, it tells you everything you need to know. So I would expect to see maybe some clawing back there on the Russell, maybe normalizing a little bit from what we saw yesterday. But Powell's not going to say, let's back to Powell, Powell's not going to say anything that's going to be earth-shocking, I don't think, in the next couple of days. If anything, he's going to continue to instill some kind of confidence. That's his job. He doesn't really want to see the market collapse. He doesn't see, in my opinion, he doesn't see that as a way to kill inflation. He wants to see the employment numbers going. And remember something, folks, he already knows what the unemployment report is that's coming out on Friday. He's got the numbers in his lap. He knows everything. These numbers aren't calculated 3 minutes before they're released. These numbers have been around for a while. So the Fed knows and Powell knows, everybody sees these numbers internally. And so, I'll focus in more as we get toward the end of the week on the employment numbers. But I think it's just more of the same, expecting about 200K new jobs, blah, blah, blah. And they can't seem to break this cycle. And I was big time, if you recall, a few months ago, going, they're not going to quit till they break something. Well, they're not even, I don't even think they care. They're not even trying to break anything anymore. And it's interesting, and I keep kind of beating on this, but I see a lot of analysts have been around the markets since around 2000 or so, and they're locked into thinking how the markets have worked for the last 14 years is the only way they work, low interest rates to get growth, all that. I'm going to continue to argue that you don't have to have super low interest rates to get growth. I don't think we see the crazy growth that we saw when interest rates were lower, but that doesn't mean that it stops and that we fall into some massive recession. I don't see that. And I keep looking for all the numbers, and we come into Thursday, we'll have claims and continuing claims. Nothing's showing up in the employment numbers. Nothing's really showing up that's unexpected in any of the economic reports. So we're just continuing to walk down this road that is, I guess, soft landing. I don't even think it's a landing, right? As I've said before, I think we had the recession last year, 2 quarters of negative numbers, and ever since then we've continued to go up. Is it going to be robust? Probably not. We're going to be printing 2, 3, 4%? No. But we're not going to see negative numbers either. So I'm not actually predicting that it's going to be anything robust whatsoever. It's just not going to be a recession. And maybe stagflation will come into play. You have to remember, it came into the markets when Jimmy Carter was leaving, Ronald Reagan was coming in, and we truly had stagflation, and it was pretty amazing. And I flash back all the time, and I've done this several times. If you go back to 1980, interest rates were 20, 25%. And we just didn't see any of the, excuse me, we didn't see any that the economy was slow, but it wasn't a depression. And we stayed in double digits, and in some cases single digits as we went forward. So, excuse me, trying to clear out the pipes here. Anyway, the scenario that I continue and will continue to promote is that rates are going to stay fairly high, and we're going to see growth in spite of that. And I just think what's going to pivot is the economy and where it's going to pivot. And I mentioned last night that all these layoffs in the big tech companies, this is bullish. I mean, did you see Apple today? I might want to take a look at that. So, the bottom line is just expect Powell to do exactly what he's been doing, jawboning, not saying anything out of line. We may see a little negative reaction tomorrow. I'll show you in the technicals here in a few minutes. But let's go ahead. I should be able to get through the stream pretty good. I will let you know tomorrow night. I mentioned I might be doing a live stream. I think I will most likely, but I'll confirm it tomorrow night, do a live stream, and I'll give you timing and all that on Wednesday. It won't be a 3-hour live stream. It's just probably going to be somewhere between 90 minutes to 2 hours max. Anyway, so let's go ahead and get into the Wavetech database. So we upticked just a little bit. We had 564 buy signals versus 268 sell signals. So we had quite, you can see on the, where it says model entries over here, you can see that we had a positive and a bullish tone for 3.2 daily, and we've seen a slight uptick to 39.40. I suspect if we can get another day or two sideways to slightly up, that we're going to see print back over 42%. Maybe we'll get some more traction there. Yeah, and I just looked over at the chat here for a minute, and I think it's an interesting comment. David Ford said in the 90s, earning 16% of my money invested. Yeah, you could have bought. This is something. That's pretty much all I have to say on the database for the moment, but I just want to comment on this because in 1981, you could have bought a 30-year treasury bond with a 16.75% yield, guaranteed for 20 years. It had a 20-year call. So from 1980 all the way to, I think the call on these bonds were 1998. And I tried to convince a large client of mine to dump some money in there and just collect basically 17% for 20 years. That was the opportunity of a lifetime. And you own U.S. Treasury, so if you believe U.S. Treasury wouldn't default, which it didn't in those 20 years, still hasn't, then you were good to go, and you were going to make 17% on your money. And, the market guys, I'm going to air quote it, would get 6.5%, 7% max yields on stock market with all kinds of risk. You could have just bought those bonds. So yeah, it was bring those days back. I think we're not going to see those days, but we are going to see days, and I've talked about this before, folks, is that money in the bank deserves to be rewarded for sitting there, and banks are going to have to pay to have that, use that capital, and they haven't had to do that for a very, very long time. It's been kind of free money, and everybody's had this cheap money around, and that is the thing of the past. And I'm going to say that probably for the next 10, 15 plus years, you're not going to see anything like that, maybe ever again. This may be an historic event that we all just lived through in the last 14, 15 years, where yields were just bottomed out and they were artificially kept there. And I actually think, this is an opinion, just talking about Powell and everything that's going on this week, I actually think, and I've said this multiple times, I'll just say it again, is I actually think we're at a more realistic interest rate relative to the risk that's being taken. And you have to understand that interest rates should be a measure of risk. That's why they have high yield and treasuries and different groups of money based on risk, and you should be rewarded. What people have been doing for years of going out and buying this, high yield, so-called high yield paper, actually should have been high risk paper to try to get some yield. Now you don't have to do that. You can go into 2-year treasuries, and you're printing up to 5% on a lot of these things. I think we'll look at when I go through the interest rates here in a minute. But this is how things should be structured. By the way, you should be able to put money in a bank, whether you're buying CDs or doing treasuries or whatever. You should be able to deposit that money and get a reasonable return on it. And the banks have to make a profit above and beyond that number. That's the way it works. It doesn't work the way that a lot of folks think. And you'll see, I won't down talk to some of you younger folks, but this is how it actually works, what you're seeing right now. And we'll see this for a while. Hopefully I'll be hanging around with you folks for a number more years to talk about it. So let's go ahead and let's get into the technicals. Like I said, I should be able to get through this in under 30 minutes. So we'll be done within the hour tonight. So let's go ahead and kick that off. All right, so we'll start with the hourly chart on the S&P, and I was talking about some potential downside, but right now the algos are about to turn up on PPM1. I'll just put a cursor over there where you can see it. PPM1 is about to turn up in the next hour. We're trading back above the 10-period moving average. We're trading right now at the 61 level. And we have 3 Fibonacci. You see these dots up here where my cursor is above. We have 3 Fibonacci targets, 87, 4101, 4111. And I mentioned yesterday I thought we might get to that, might get into the 41 handle. 4113 I think was the number on the weekly market grid. So when I bring up the daily, I'll talk about this 3-day trade again, and that should be pretty helpful. And I just want to give a shout out to all the blues names on here. You guys are all moderators. Haven't had to put up with anybody. Thank you for paying attention and helping me out there. It's made these streams much smoother that I don't have to deal with that stuff. So thank you again. I just want to call everybody out. Thank you so much. But somebody called them the Smurfs. So thank you for the Smurfs. Okay, so but looking at this hourly chart here, it looks like we're going to get a possible move up into these fib numbers. This is also a little dragon head formation. It's not super clean, but we're starting to break above this, and it looks like once, you know, it's amazing to me. Every night I'd say the same thing, and the same thing happens, but it looks like the strength will probably last right into London Open. That hour before the Open in London and the hour after is always really the best way to put it. That's a point in time. If you're around and you can watch the E-minis and you can trade these things around there, you will see some crazy opportunities. I'm a bit of a vampire. A lot of times I go to bed at 1 or 2 o'clock my time, which is, since I'm 2 hours behind New York, that's 4 a.m. New York. And you can see a lot of stuff, a lot of trades you can put on there or be exiting on those type of things. So it's really been an opportunity at that time if you're doing that type of activity. But this chart yesterday was like insanely good, the way everything's set up. And I mentioned last night, I'm going to try to be a little more active, putting some things out on Twitter that are relevant, that maybe it can be useful during the day. So if you haven't followed me on Twitter, follow me. It's PortfolioXpert, but remember, there's no E in the expert. So it's expert is all it is. It's Twitter/expert, XPERT. Okay, so follow me there, and I'm trying to get into some more stuff. Also, we've got a big project that we're working on, and we're working on a whole bunch of articles and things that are going to help you use the indicators as well as PortfolioXpert and Wavetech and all this stuff. So we're finally getting our act together on some stuff, and it's just taken a lot of work to try to get this stuff together. Yeah, so it's I just saw somebody comment, but let me put my Twitter handle. I'm not logged in as Kendall Report, so you'll see Bob Kendall. Let's put this up. It's www.twitter.com/just expert. There you go. It's in there. Bob Kendall. I'm not logged in as Kendall report on this one. So anyway, that's the place to go. Let's get into the daily, and then we'll talk about market grid, all that stuff. And we look at daily here. Daily looks like a little bit of flat spot here, but we are right now, PPM1 is up 0.13, PPM2 is still negative. So I'm going to blow this up just so we can see the configuration here of the moving averages. But they're kind of it's kind of a spaghetti bowl here right now. Let me take off the webs here for just a second. Just clean this up, but you can see the way the averages are. The 21 is declining, the 40 is rising, and the 10 is rising below it. So what needs to happen here is that we need to see if there's going to be a new trend. I believe we're going to have to see all of these averages line up the way they should. And I'm just going to bring up real quick I'm just going to draw on here real quick just so you can see this. But what should happen, here's the 10 period. Everything should start, this moving averages are going to kind of crisscross in here. And during this time, I'll go to a different color here. During this time, what ends up happening is that we get into basically a box formation, and you start to just trade within the range here. You don't get out of this. So it doesn't look like there's any big rally coming out here. We'll probably still have some consolidation, a lot of work to do. I believe the weekly charts confirm that, but we should get in maybe to the upper end of this box around 41.13, maybe a touch more. 41.40 is a number that also is out there right now. So we're really just looking at this thing starting to set up here from that standpoint. So just realize that we're not really getting things. So, any big explosion here. So let's talk about the 3-day trade here before we go on. So I'm going to blow this up just a bit so we can see it. So we got the outside reversal that we got on last Thursday. So Friday's rally, we opened lower, which the setup for this is you buy the lower open after a key reversal, and this has to be at the bottom of a sequence, which it was. And then the first day we got to close, we got to make a new high and close higher. We clearly did that. The next day, which was Monday's session, we have to make a higher high, but we don't have to close higher. We can't ever make a lower low. So this is a really tight range for tomorrow. Okay, so there's a very good chance that this trade will be stopped out because of the configuration on these bars. So this is the criteria. Is for today, today meaning for Tuesday's session, we'd have to trade above the 82.50 high, but we can't take out yesterday's low, and the low was 41. I'm just making sure I have these right numbers. 41.75. So in theory, if we hold right where we are right now, the low's been 51.25. But so here's where the stop goes. The stop goes at 41, just below 41.75. So 41.50. Maybe you make it 40. If you got in this trade on Friday on the lower opening, then for a short-term trade, you stop out. It's interesting because the 40-period moving average is rising in here as well. It's up only 0.09, so it doesn't have a lot of momentum. But we're sitting here, and what could happen is that we get this trade fails, and that's why it's called a 3-day trade. You have to maintain. We have to make a new high today, but we do not have to close higher, but we cannot take out yesterday's low. So 41.75 is penetrated. This trade's over. You take profits and you leave. That's it. So interesting setup. The money was all made on Friday's action, and there were some reasons to potentially, if you're trading intraday, to take this to take some profits on this spike today. I was guilty of that. So, but the trade was a good one. If we do take out the 41, then we probably get maybe a day and a half or so down. We trade in. We'll just have to watch this pattern really closely. But just know that 3-day trade stopped. It's moved up to 41.50 or 40.95, something underneath there. All right, so got that covered. But yeah, so the algos are suggesting that we're going to stay positive, but the 10-period moving average isn't really, like I said, the 40 is going to be the number to watch. I think we see this thing pull back here just a little bit. We'll see how this thing all plays up. Yeah, I always love these comments like the bear pennant. You'll never hear me talk about that stuff. That's Edwards and McGee, 1922. Never worked, never will. Anyway, we'll see what happens here, folks. I know everybody likes to draw those wedges. Our database on intermediate is virtually 70% long, and I can tell you when it's 70% long, the markets don't collapse. And that's based on, let's see, about 30 years of experience. So we'll see. Doesn't mean that it couldn't decline, but there's not any big collapse coming in out of this pattern. All right, so let's move on. Let's hit we've covered that. Let's move on to the NASDAQ, see if we can get the rest of this stream done tonight. By the way, I do want to say something before I go through the NASDAQ tonight. I want to shout out, I wish I knew the handle of the person that did it. I'm just kind of looking to see if they're around. I don't see them right away. But there was a great dialogue. Somebody asked a question right at the end of the stream last night. Somebody answered perfectly. I guess you've been in the live room, but I couldn't have answered it better myself. So I really appreciate you guys talking. And if I see anything like really wrong, I do go through and read all the comments. I wish there were a lot more of them. I love back in the day when we'd get 150, 200 comments. So that also will help to beat the algos if you folks are commenting on them. But the point is, thank you for actually paying attention. And I was like super excited to see the comments. I'm like, wow, these are good students. They get exactly what it was. So maybe if I'm paying attention, I'll get the handle of that person. So anyway. So here we go. So NASDAQ, similar type pattern. We got right up to, you can see my cursor here, we got up to the second derivative on PPM1. It looks like we're going to get a bit of a reaction. Like I said, it's interesting because there's some fib target at 12,086. Low so far, 12,312. So we could see a reaction back in here. This looks like 1-2 days maybe of sideways, and then maybe a re-acceleration as we come into the week. As long as we hold above these moving averages here on the NASDAQ, the key ones being the 10 and 40. So the 10 is 12,147, 12,105. As long as we stay on a closing basis above these, we should be able to see the markets try to get more of an uptrend going. But like I showed you on the S&P, we're really probably locked into a box, a sideways choppy range. It doesn't appear just yet that we're ready to go a lot beyond that. Let's click on and let's go to the weekly chart. And weekly chart is also getting close to a peak here. So my guess is we get really just in a chop and go back into the choppy range. I don't think we're at that point where things are going to break out and go crazy on the upside. Yeah, and just I saw Oliver mentioning that the rejection was something. Yeah, it really was, and we really hit those extremes. But once again, if you look at what's going on here, folks, we're just locked in this range. So you don't want to get too bullish and you don't want to get too bearish because it's a range-bound market. I warned you when we were trading down at those low 39s. Be careful about getting bearish down here, as we're in a trading range, and we're not in an uptrend. We're not in any robust anything. Okay, so I know it's been kind of a tough way to go, but we've been locked in here. We had the beginning of the year rally. Now we're locking in on this February peaks and valleys, and that's just where we're going to stay, I think, for a number of weeks. And I don't see anything that's going to break that out. I think on, what is it, the 21st and 22nd of this month, we have our next Fed meeting. Then I think it goes out to May, I think is the next meeting after that. So, you know, we'll start to, at least in the next week or so, we'll start to move forward after Powell talks tomorrow. The higher rate people that are, I guess, the sky are falling around higher rate folks will be screaming as loud as they can. And whether we get a little backfilling, maybe we do. I'm just here trying to give you folks like the best guidance I can. Just know you're in a trading range. We're not going to break out on the upside. We're not going to break out on the downside. So you can play this range. These are some of the best trading markets when you see this. If you were trading 30, even if it dipped down to low 39s, if you're trading 39.50, 40.50, there's been multiple trades over the last several weeks on this thing. This is, you know, and we're talking NASDAQ here, but same thing here in the NASDAQ. We've just got this range bound. We do have a slight upside on the week. This is a weekly chart we're looking at. We have a slight upside here. We get pretty decent numbers, 1.12 on PPM1. So even though it looks like it's going to flatten out, that's going to be your main support line here is going to be 12,064. And let's see what this is rising. Yeah, about 100 points per week. This is a weekly graph we're looking at. So it's going to go from 12,165, 170 next week. So that's going to be where your support levels are. And then we should be able to set up some ranges on this as we go through, like the daily charts. All right, let's talk about the Russell. This is took a pretty good hit yesterday, down 1.48 on the cash. And this is a Russell futures here. And we're just seeing some of this stuff starting to come back into the range already on the Russell. We were above the 10-period moving average. This is weekly. Now we're back below it, and we're looking at that number being 1909. We're back at 1906. We're just kind of hovering around, and PPM1 is at 0.7. So that's going to keep the market probably climbing. This is the wall of worry that's in here. Let's blow this up just so you see that 10-period moving average better in here. You can see how it's upward sloping. We should crawl right along this line here from that standpoint. We do have downward fib target right now, 1834, which is also right at the 40-week moving average. Let's flip this over to a daily real quick. And you see on the daily, we're trading down at the bottom in the range, just like all of the indexes. The S&P, NASDAQ, and the Russell all look similar, that we got a couple of days of weakness. The extreme here, fib target 1, 1859, kind of maps out to those numbers that are on the weekly charts. All right, so we'll take a look at the 10-year. This is the daily. It rebounded again. We got back to the 398 level, so we're hanging just above this 10-period moving average. It does appear that we're going to see some softness. This is what I was talking about. The grid turned down, but it's very tight because we got, I have to go to TradeStation. Let's do that real quick here, because I want to bring up that so we can see what the grid looks like for tomorrow. And this is daily. So let's take a look here. For tomorrow, the ranges are, RXT is 405, and the R2 401, let's call it 402. So 402, 403 is probably a peak there. On the downside, we're looking at 396, 395. So we're probably going to stay in this range. We did open below that number, and then we rallied back. This is the daily 10-year. So let's take a quick look at, let's look at the futures, and we were above that 10-period moving average. Algos suggest we should see the 10 turn up. I still think we move up toward this 111.26 level. Somewhere in there is going to be the upper end, and we're looking at the market grid, just bringing that up. It's over on the far right here. For today, this is a daily chart for overnight and Tuesday session. We're looking at the range here, probably R2 111.14, and on the downside 110.24. So R2 S2 possibility here. And yesterday what we got was we printed up, let me just get to the highs. I can't see the high range here, what it was. 111.17. So if we look at yesterday's market grid, 111.1950 was R3. So we went just above R2 and then came back down on the futures. So when the futures are going up, rates are going down. Futures going down, rates are going up. So it's inverse. But the patterns still look to me that we're trying to put a bottom in here, and that the big number, and I've talked about this for a while here, is this pivot number that's on the sheets right here. It's 112.20. That's, for me, that's the only number that matters. We probably, if we stay under that number, then we'll see that that's approximately approximated. That's 184, 180. I'm sorry, 384 to 380 on the downside on yields will be the peak from that standpoint. All right, next, crude oil. Crude oil continues to climb, as I've been talking about. Algo suggesting we're going to move toward this potential fib target 1 right now, which is, the fib target 1 is 82.17. We're trading right now at 80.69. I still think we'll continue. You can see the market grid is also at the top here. 81.50 is R3 today. This is daily, and 82.07 is RXT today. And it looks like the algos probably tomorrow is going to be the top end of this. So maybe we print out and we hit this fib target 1 and trade around there, maybe get a little rejection. But regardless of what happens here, we're going to stay above these moving averages here in the pattern, which, let me give you what those values are. They're almost all the same, right? So 10 is 77.51, 77.72, and 78.12. So we'll call 78.15 to 77.50 is your major support in this pattern. I don't see us getting down there. Probably trade maybe an S1 on a daily basis today. So use those numbers from that standpoint. Yeah, but look for this thing to print out and probably complete itself here in the next 2 days max. Okay, and I'll cover, as always, tomorrow night. Okay, so we look at gold. Gold is just kind of hovering here. We've got this downward. This is the daily downward 21. The algos on the PPM1 are suggesting we're going to see the 10 turn up. So we should stay above the 1839, 1840 level over the next several days. If we can maintain and get above this 21, which is 1853, then we could see some prints up maybe into the 1865, 1870 level. But this market is consolidating. The big pivot on this screen right now is right here at the 1886.40. A break above that, that would send us into retest of some of these previous highs, but doesn't look like that's going to be probably a rejection point. So look for potential trade-off of the 80. Let me just get the right number here. 1886.40 would be the number to look. If we trade it up there, there's probably a nice trade on a rejection trade off of that. Unless there's something going on that's driving the markets, I would say that's going to be a really good point. Okay, folks, final market, Bitcoin. I have a question for you. And I know some people don't care about Bitcoin. I think it's an interesting market to keep track of, but I would like you to tell me if you want me to continue to follow Bitcoin, and if it's not Bitcoin, what else would you think would be significant enough to follow on a daily basis? So I'm putting that out there. Let me know what you think, and that will be very interesting. So if you're watching the replay of this and you made it this far, let me know. And I'm sure some of the folks that are watching all of the watching the videos to this point will maybe are watching it for this. Anyway. Okay, folks, so just keep commenting, all right? All right, so let's go ahead and cover it. So here's the daily charts. We're really, as I've been talking about, we're in this choppy flat line. We've kind of drifted down. We're coming into support. Fib target 1 was 21,510. We printed, what's the lowest we printed here? 21,170 printed the other day. So we printed down into this number, but I don't see us getting much below 21.5. The next number is 2,500. This is a daily. So let's flip over to a weekly. The weekly is still climbing that 10 period moving average. It's still up at 2.72. It tells us that there's only about a 10% probability for the market to close below that value, which is 22,197. So that is your support. So far been low 22,263. Last week, the 10 period moving average was 21,609. The low last week, 22,000 even. This is a simple 10 should lead the way up, and whether we're going to get another leg up. Right now, there's no upward Fibonacci numbers. There's no projections to the upside. There's nothing really other than this upward slope moving average. And we're also looking at PPM2 plus 0.78. So we have a couple numbers here that are suggesting we're going to go on there. Okay, folks, we made it. Where are we at here? Yeah, just about a little bit under an hour. just looking at some of your comments here. Yeah, it's always a mixed bag on this. It's always a mixed bag on the Bitcoin. So, but comment some more. Make your voice heard. Okay. Yeah, nat gas is. I see some folks cover nat gas. Nat gas is fine, but I would like to have already cover crude oil. Maybe if in the oil section, maybe I could expand out some of that. Maybe hit another market when it's kind of dull, crazy, and crude. I think crude's an important market to watch. I've been trading gold and been involved in gold since 1980, and I'm having a hard time after 42, 43 years letting it go. So that is going. Yeah, so couple things here. So I am working on a project on the reshoring portfolio. My plan is, and it's coming together a lot slower than I thought. You folks have no idea what a disruption, maybe you do because I wasn't online, but what a disruption my illness in January was. Man, I mean, it's put me way back, and I've got other personal issues going on, not with me, but a family member with health issues that I'm dealing with. And so we're just trying to kind of move it forward. I'm actually, I've modified a lot of my activity, but so what we planned on doing, and we still plan on doing, is we're going to have a really nice environment we're putting together to support everything that we do, because I have a mission, which is to help folks to manage their retirement funds and to be able to eliminate third-party elements in their life. And some of you have already done that, but the support has been sketchy at best. I'm a very straight-up guy, so we're going to change all that, and we're starting a mastermind course. Is probably going to be on indicators for mastermind. There's going to be PortfolioXpert and a Wavetech, and so there'll be multiple hours and things. So once we get this all organized, you folks can participate, and we'll get everything set up here very soon. We thought we were going to have something done today, but it turns out it's not. We won't have one of the key components until Saturday, and then we have to put it together. So like everything, folks, if you've ever built any software, websites, any of that stuff, it never gets done when you think it's going to get done. So I appreciate it, your patience. And so somebody's saying a third party like crypto. No, third party like an investment advisor. I'm trying to eliminate folks that are there's some good ones out there, and we know a bunch of them. They use our software, but there's also just a lot of leeches out in the planet. And so I worked with these folks for over 30 years, so I know their characteristics. Like I said, the people who use our software are not the people I'm talking about. It's a lot of these passive investors and anybody they start talking about financial planning, a whole bunch of other stuff. I'm gonna dedicate a whole mission to this. It's kind of become important to me, and I know I've talked to Mr. Campbell at length. So there's a lot of issues here that need to be dealt with, and I think I can help a lot of people, and that's really what it's about. Now we're working on a couple things that are like super cheap solutions to these things that are like, so everything will be back tested and everything will be validated is the best way to put it. So anyway, no 60/40. That maybe that's what the website will be called, no 60/40. Anyway, folks, I really appreciate everyone being part of this channel. Like I said, we're kind of transitioning at the moment, trying to get some things together. I thought we'd be done with this beginning of February, but because of my illness, everything's been moved out. And now we had a couple weeks there where I wasn't going to be online to deal with this stuff. Now I'm locked into dealing with life and business and all the things that go on in the world that we live in. So it's much more cluttered up. So, but we're making some pretty good headway. Can't wait to tell you all about it. So we'll definitely be getting all of that stuff to you as soon as we can. Thanks again. I'm just babbling here at this point. I love hanging out with you folks. So, and I love all the comments. So make sure you, like I said, make your voice heard on this Bitcoin thing, and also make multiple suggestions on what could be filled in. I have some ideas. I won't share them with you because then you're going to want me to do it, and I'm not sure I can do it. But I do have a couple ideas that I think could be interesting to put together. Anyway, folks, have a great evening. Good day trading tomorrow. We'll see you tomorrow night, same time. Yeah, John, there will be a Q&A session, all kinds of cool stuff. You'll see, it's going to be great. Joel Taylor. It's not reckless. I have a quantitative